Hey, welcome back to Right on the Money. If you are just joining us, we are talking with our friend Chris Thomas of Thomas Financial Corporation out of Flowery Branch, Georgia, perhaps the prettiest name for a city in Georgia. It's awesome that we're living longer in retirement, but that presents a unique challenge when it comes to healthcare costs, which are just rising just exponentially almost. So, Chris, how do you help protect your clients when it comes to that looming potential threat of healthcare?
Sure. Well, we find that most folks are tending to self-insure, whether that be just leaving their money where it is and hoping that they do not run into a situation where they need long-term care, which is where you need help doing 2 of your 6 activities of daily living. Basically, 2/3 of people will end up needing some form of long-term care. It may be for a short period of time. It could be as much as a couple of years, or in some cases, 10 years. The traditional style of protection was the standalone long-term care policy, which I really haven't written one of those in quite some time. There's a number of reasons why. The cost of those policies have become out of control. We don't have a history with long-term care like we do with life insurance. Life insurance, we've got mortality tables and just decades of data to look at, and it tends to be consistent. But when it comes to folks in long-term care cost, these numbers have skyrocketed, and the cost of the premiums from the insurance companies have tended to get out of control at times too. But we have a bunch of new innovative products out there where, like a standalone policy, like your auto insurance, you could pay for insurance premiums for 10 years, never have an accident, and all those premiums are gone. With these newer asset-based long-term care policies, now you are coming up with a lump sum money up front, but you're leveraging that money in today's world approximately 2.5 to 3 times your money in the event that you actually did need long-term care. Now, if you didn't need long-term care, it's still a win-win situation because you're leaving a death benefit to your heirs or using the money for income later. So it's really a win-win-win situation. No matter what happens, whether you need long-term care or not, you will benefit from the policy. So they're really different from the old standalone, where you're paying that premium of a few $100s every month versus coming up with a lump sum. But I do have clients that have found that to be very, very helpful. And in one case, I had a client who wanted to protect $700,000 of her money for her 2 children. And we put her into a policy where she had a $100,000 outlay. She's got a $5,000 lifetime benefit should she need it. If she doesn't need it, she's got a $176,000 guaranteed tax-free death benefit for her children. And she's even got a return of premium on the policy. She can get $100,000 back anytime in the 15 years. So that's just an example of what's out there. They are changing as well, but there are some wonderful products out there for people.
One last question for you. This is a curiosity question, but with the demographic changing out there, with the folks you're probably helping retire and prepare, any changes you're seeing as as the population, more people are retiring and more people are having that conversation with you? Any trends? Anything you're noticing out there?
I do notice people are working longer. That's one thing I've noticed. Again, I've been doing this for over 2 decades now. I think it's just to assure that they have extra money. Maybe they have uncertainty. And then that's where we get back to the question of well, are you more concerned of the return on your money or the return of your money? So everyone's different. When I sit down with folks, I approach them all as their own specific case. They have their own pots of money with a different purpose to accomplish different things for each pot of money. So again, it's to each his own. I'm here to help folks understand what's available. At the end of the day, it's their decision. But yeah, that's probably the number one concern, is people concerned about outliving their money.
And that's why they need to reach out to you, sir. We're at the end of our time. And Chris, I have to tell you, fantastic conversation. If you have questions about making sure that you have your ducks in a row, so to speak, you need to reach out to Chris. You can reach out to him. You can ask him about getting a copy of this book because it is fantastic. don't forget that you can watch full Right on the Money Show episodes on our official YouTube channel, or you can go to rightonthemoneyshow.com. That's the spot where you can get up-to-date financial news and insights from the top insurance and financial professionals in your area. Thank you for watching. Be safe. We'll see you next time.